The world economy refers to the economic activity of all countries and regions around the globe. It encompasses the production, distribution, exchange, and consumption of goods and services. It includes the international trade of goods and services, as well as the international flow of capital, labor, and technology. The performance of the world economy is often measured by global economic indicators such as gross domestic product and gross national product. The world economy works through a complex network of interactions between countries, businesses, and individuals. International trade plays a major role in the world economy, as countries import and export goods and services with one another. This trade is facilitated by international agreements, such as the World Trade Organization, which sets rules and regulations for trade between countries. Another important aspect of the world economy is the flow of capital, which refers to the movement of money between countries for investment purposes. This can take the form of foreign direct investment, where companies establish operations in other countries, or portfolio investment, where individuals and institutions buy stocks and bonds in foreign companies. Additionally, the movement of labor, or the migration of people between countries, also affects the world economy. This can include both skilled and unskilled workers, and can have both positive and negative effects on the economies of the countries involved. The world economy is also heavily influenced by the actions of international organizations, such as the International Monetary Fund and the World Bank, as well as by government policies and regulations. Economic downturns or recessions can have a significant impact on the world economy, and can lead to increased unemployment, reduced economic growth, and increased poverty. Overall, the world economy is a complex and dynamic system, with many different factors influencing its performance. The history of the world economy is a long and complex one, dating back to ancient civilizations. However, some key milestones in the development of the world economy include the development of trade and commerce in ancient civilizations, such as Mesopotamia and Egypt, which laid the foundation for the exchange of goods and services between different regions. The medieval period, characterized by the rise of feudal systems and the development of trade networks along the Silk Road and other routes. The colonial period, starting in the 15th century, when European powers began establishing colonies and trading posts in the Americas, Africa, and Asia, which led to the growth of global trade and the spread of capitalist economic systems. The Industrial Revolution, starting in the 18th century, which led to the mass production of goods and the growth of industrial economies in Europe and North America. The creation of the gold standard in the late 19th century, which established a fixed exchange rate between currencies and helped facilitate international trade. The Great Depression of the 1930s, which led to a severe contraction of the world economy and widespread unemployment, and ultimately the creation of the Bretton Woods system in 1944. That established a new monetary order, based on the dollar. The post-World War II period, characterized by the growth of the U.S. economy and the creation of the World Bank and the International Monetary Fund, which provided economic assistance to war-torn countries. The rise of globalization in the late 20th and early 21st century, characterized by the rapid growth of international trade and investment, as well as the increasing integration of economies around the world. Each of these events has had a major impact on the world economy and has shaped the global economic system as we know it today. The size of the global economy is often measured by gross world product, which is similar to gross domestic product but includes the economic activity of all countries instead of just one. There are many factors that can affect the performance of the world economy. Some of the most important include 1. Economic growth. The rate of economic growth in different countries can have a significant impact on the world economy. Countries with strong economic growth tend to import more goods and services, which can boost the economies of other countries. Conversely, countries with weak economic growth may import less, and this can lead to a slowdown in global trade. 2. Interest rates. The level of interest rates can affect the world economy by influencing the flow of capital between countries. High interest rates can attract foreign investment, while low interest rates can discourage it. 3. Exchange rates. the value of a country's currency in relation to other currencies can also affect the world economy. A strong currency can make a country's exports more expensive, while a weak currency can make them cheaper. This can affect the balance of trade between countries and can have a significant impact on the world economy. For natural resources, the availability of natural resources, such as oil, gas, and minerals, can have a major impact on the world economy. Countries that are rich in natural resources may have a competitive advantage in the global market, while those that are not may struggle to compete. 5. Political stability. Political stability is also a key factor in the world economy. Countries that are politically stable tend to attract more foreign investment, while those that are not may struggle to attract it. Political instability can also lead to a decrease in trade and economic growth. 6. Government policies. The policies of governments can also have a significant impact on the world economy. For example, a government's decision to increase taxes or to reduce government spending can affect the performance of the economy. 7. Technological advancements. Technological advancements can also have a significant impact on the world economy. It can increase productivity and efficiency, leading to economic growth and development. 8. Demographics. The age structure and other demographic factors of a population can also affect the world economy. For example, an aging population may lead to a decrease in the labor force and a decrease in economic growth. These are some of the key factors that can affect the performance of the world economy. It is important to note that the world economy is a complex and dynamic system, and the relative importance of different factors can change over time. There have been several major crises in the history of the world economy. Some of the most significant include 1. The Great Depression of the 1930s. The Great Depression was a severe economic downturn that began in 1929 and lasted until the late 1930s. It was caused by a combination of factors, including the stock market crash of 1929, the failure of banks, and the contraction of international trade. The Great Depression led to widespread unemployment and poverty, and had a profound impact on the world economy. 2. The oil crisis of the 1970s. The oil crisis of the 1970s was caused by a series of events that led to a sharp increase in the price of oil. This included the embargo imposed by OPEC countries in 1973 and the Iranian Revolution in 1979. The crisis led to inflation, high unemployment, and a recession in many countries, and had a significant impact on the world economy. 3. The Asian financial crisis of 1997. The Asian financial crisis was a period of financial turmoil that began in Thailand in 1997 and spread to several other countries in the region. It was caused by a combination of factors, including a lack of transparency and poor regulation in the financial sector, as well as a high level of debt. The crisis led to a sharp decline in economic growth and a significant loss of wealth in the affected countries. 4. The global financial crisis of 2008. The global financial crisis was a severe economic downturn that began in 2008 and had a significant impact on the world economy. It was caused by a combination of factors, including the failure of large financial institutions, the collapse of the housing market, and a lack of regulation in the financial sector. The crisis led to widespread unemployment and a sharp decline in economic growth. 5. The COVID-19 pandemic. The COVID-19 pandemic that began in 2019 has had a significant impact on the world economy, resulting in a global recession and widespread job losses. The pandemic led to lockdowns and travel restrictions, which led to a sharp decline in consumer spending and business activity. The economic impact of COVID-19 has been severe and widespread, affecting nearly every sector and country. These are some of the major crises that have occurred in the history of the world economy. Each of these crises has had a significant impact on the global economic system and has led to significant changes in the way the world economy operates.